Welcome to part 2. In part 2, as always, we discuss dollar index and its components and also USD and INR, though it is not part of the dollar index. First the levels, then we go into the discussion part of it. Dollar index closed this week at 103.685. 2.4%, 1.9% down. EUR-USD is 1.09, 2.2% up. GBP-USD is 1.2461, 2.2% up. USD-JPY is 149.59, 1.3% down, while USD-INR is more or less flat. Right? Overall, in this year, dollar index is up just 0.4%, almost flat, while Euro is up against USD by 2%, while GBP is up against USD by 3%, whereas USD is up against Japanese yen by around 14%. USD INR is flat, 0.2% up. So if you see that, then that means virtually dollar index has done nothing. Initially it was significantly down, then it came back, but the strength is more against that of JPY. Whereas GBP and Euro is strong against dollars, at least in this year. So now, what happened in this week? It formed a solid red candle. Last week, if you recollect, I said that it formed a dollar index formed a bearish harami, and the opposite was formed by Euro-USD and GBP-USD. This week, dollar index formed a solid red candle, while those two formed a solid green candle. In the monthly, if you recollect, I said that there is a chance for morning star for Euro and USD to form, which it formed. Hence, it formed a solid green candle and moved up, which means dollar index formed a solid red candle. In the entire process, what has happened? Now, dollar index is just above the 200-day simple moving average. That's the only support that is available in the daily chart for dollar index. Whereas in the daily chart for Euro is again significantly up against all the simple or exponential moving averages, while GBP is just below the 100-day moving average. In the weekly, if you see that dollar index is broken below the 50-week moving average and 50-week simple moving average. On the other hand, Euro and GBP both is just above the 200-day moving average, 200-week moving average and simple moving average and exponential moving average, but is just below, but above all the other moving averages. So that means it is just inverse relationship. So Euro and USD, Euro and GBP is driving against USD, whereas JPY has fallen, which is where dollar is relatively, dollar index is at the same levels where we are seeing. So now this level is very crucial. We had said that in the monthly, of course, as I said, it has formed a solid red candle. Hence, for dollar index, the now it is at 103.8, whatever levels I said, 103.68. So the 102.9, or if it goes below, the monthly moving averages come right from 99 point to 98 levels, 50 month, 100 month and 200 month. Hence, that will act as a very good support, which you have been telling for quite some time, right? Now let's go into USD-JPY. USD-JPY, I said that the up move is limited from here. One can see my last week's video or even the previous weeks or any week. You can see that though it was a significant up move, we said that it is going to be limited from now on. Though it formed a new high this week, it formed a solid red candle, bearish engulf. And in the daily chart, it went close to breaking the 50-day moving average, but it didn't break, and it's now going to take support from there and it is going to bounce. So dollar is definitely strong against Japanese yen. So hence, we don't expect significant fall. In the monthly also, it has formed a red candle. But notwithstanding that, it is going to more or less close the year around the same levels. USD INR, it has formed a red candle in the weekly, and in the monthly chart, it is just hovering there. Nothing much. In the daily chart, though it broke the 50-day moving average briefly, it once again formed a solid green candle and moved up. So then that means, no, you have 2024, dollar is going to significantly move against INR. That is very clear. That's very obvious. So overall, this is how the dollar index and other things moved. Because of dollar index going down, or Euro-USD is going up and GBP-USD going up, dollar index going down, and Japanese yen also is gaining some strength against dollar. You had risk on trades in equity, which is why equity market performed. Next week, you have some dollar index, some bounce back is expected, which is why there will be some fall in equities also if one wants to correlate. Thank you very much. See you in part 3 of the video.